Good evening, viewers. This is a series of GST educational videos, and we are starting with filing of monthly returns. Now, let's understand how the filing of monthly returns happen in GST. So, we will give you a walkthrough of the various activities. So, broadly, a normal or a regular taxpayers file 3 returns every month. So the first return is GSTR 1, and there is a GSTR 2A, which is an information which is flown from GSTR 1. The second return that is filed is GSTR 2, and this is your purchase return. And the information of GSTR 2 moves to GSTR 1A. So GSTR 1 is your sales return, and 1A is an additions to the sales return. The third and last return is your GSTR 3. So GSTR 1, your sales return is filed by 10th of every month, and GSTR 2A, this is an auto-populated information once GSTR 1 is filed, which means your supplier, when he files their sales return as a customer, your data, whatever the supplies you have received, will be available in your 2A. You would do the reconciliation of that with your purchase register, and you may, if you find you have to accept them, you will accept. You have a choice to reject some records, you have a choice to modify. You can make additions if any of records which are missing. Now this activity you would be doing from 10th of a month to the 15th. On 15th, the due date is for filing of GSTR 2. Once you file your GSTR 2, this data would now come and sit in GSTR 1A if you have made any changes, which means your supplier has given some information, either you have added, rejected or made some changes. That relevant information would only go into 1A for the view of your supplier, and supplier has to take the action by 17th of the month. Now once this is done, this data is auto-populated in your GSTR 3, which means whatever the data you have submitted on GSTR 2 on 15th, and whatever the data you have submitted GSTR 1 on 10th, plus the acceptance of additional deletions you have accepted on 17th, would get auto-populated and come as GSTR 3. And by 20th, you have to discharge all your taxes which are due and file your GSTR 3. So let's quickly look at how does this mechanism work with a small example. Let's take a case of Supercars Limited. Consider the SSE in our discussion is Supercars Limited. Now Supercars Limited is buying materials from Ratna Steels. Now for hypothetically, we consider there are 4 invoices which have been purchased by Supercars from Ratna Steels. So whenever in the books of Supercars, whenever they make a purchase, these purchases which have been done from Ratna Steel for Supercars would become inward supply. So Supercars would record them as their inward supply, and for Ratna Steels, these would become as outward supply. So Ratna Steels would record these items as outward supply. So we have transaction 1, transaction 2, transaction 3 and transaction 4. So there are 4 transactions got completed during this period. Now let's take a case where there is another SSE, Reva Automobiles, wherein Supercars is onward supplying these purchases to Reva Automobiles. So in this case, Supercars would become the seller and Reva Automobiles will become the purchasers. So when Supercars is selling items to Reva Automobiles, this becomes the sales, and in GST we call sales as outward supply register. So these invoices gets recorded in the books of Supercars Limited as outward supplies. So let's assume there are 4 transactions made by Supercars to Reva Automobiles. Now as I said, the due date of the filing of first return, which is outward sales return, is August 10th. So on August 10th, Supercars would be filing their sales, which has been said made to Rev Automobiles. Ratna Steels will be making their sales return, which has been made to Supercars. Now, these are filed in the form of GSTR1. Now, imagine, let's take a small case where Ratna Steels makes returns only for 3 items and they misses out one record, and Supercars records all those 4 sales which they have made. These returns GSTR1 will get filed to GSTN network through various application softwares. So both Ratna Steels and Supercars are filing their records on 10th of August. Now what happens is, the moment it is filed on 10th by Ratna Steel, as I said, it will, the GSTR1 will become GSTR2A. So from 11th of August, this data filed by Ratna Steels will become 2A for Supercars Limited. Now Supercar Limited has to download this data and reconcile with their books of accounts. So for Supercars, they would be reconciling with their purchase register. Now on scrutiny of the purchase register, they would notice that 3 transactions are available. However, one transaction, which is the invoice number 6, is missing. So Supercars Limited will pick that transaction and add it to their 2A and file it to GSTN portal by 15th of August, and this gets filed as GSTR2. So the moment this is filed, GSTN network will record this as provisional credit. So GSTR2 will show 40,500 provisional credit to Supercars Limited. Now August 16th, this data, which is the new line item which has been created by Supercars, would be available as 1A to Ratna Steels. Now 1A of Ratna Steels will download this data and match it with their outward supplies, and they check whether this item which is added by their customer is available in these records. If they find it is available, they would accept the 1A. Now come 20th, this both the data which is filed by GSTR1 and GSTR2 will come into GSTR3 automatically, and Ratna Steels and Supercars now discharge their liability by making payment and file the returns. Once the returns are filed, whatever was showing as a provisional credit in the Supercars Limited will now become an eligible credit. So users, this is a seamless credit mechanism, and this is how the GST returns filing happens in the new era. Thank you.